guys, we're going to start chapter 3 today. 3 is doing payroll and commissions records for a corporation that has different departments. So we're going to start with 3-1 work together. It's on page 68 in the textbook. So 3-1 work together. So the first thing is it tells us that our company is Santa Clara's Hardware's partial payroll register for the pay period ended July 3rd, 2014, and a blank earnings record form are provided. Use appropriate withholding taxes table shown in this lesson for federal income tax. So that's going to be on page 66 where we're going to get use those charts. Deductions for all employees, 5% for state income tax. Remember, if you live in Florida, New Hampshire, whatnot, you don't have to pay state income tax. In New York, you do. But because they want to sell the book in multiple states, they don't put in state income tax, so we're just using the generic amount of 5%. 6.2 for Social Security, 1.45 for Medicare. Use H for health insurance, L for life insurance. Remember, Medicare and Social Security, you pay, and your employer also matches it. So both you and the employer pay. For 2014, you have to pay Social Security tax on $117,000. All right, you pay and your employer. But once you make over $117,000, you no longer have to pay Social Security. It's called you reach the tax base. All right, first thing, we are going to prepare a commissions record for Allison Cavero. She's a supervisor of the hardware department for June of the current year. All right, here's our commissions record. First part is just filling in the information. Mrs. Cavero is employee number 2, is paid biweekly salary of $1,200 and a monthly commission of 1% of net sales. All right, so she's employee 2. Her name is Allison. Her commission rate is 1%. Her department is hardware. The month is for June. And she normally gets $1,200 biweekly salary. So no matter what, she's going to get that $1,200 every other week, but then she gets her commission on top. So our sales on account. So it goes on to tell us that according to the records for the hardware department for the month ended June 30th, our sales on account were $17,895. Our credit card and cash were $15,523. Equals total sales for the month. So we're going to add these two together, which will give us $33,418. Okay, that's how much we sold. Some people received a discount for prompt payment, and the discount, again coming from page 68 in the textbook, was $179. And then we had people that returned items, and there was $2,039 worth of returns. We're going to add these two up, which will give us $2,218. This will negatively affect our sales, so we'll subtract $2,218 from the $32,418, which is going to give us a net sale of $31,200. Our commission rate is 0.01 because we needed to convert our percent into a decimal. So now we're going to multiply 31,200 times 0.01. So she made $312 of commission during the month of June. It's not great, but it's in addition to her salary. So that is a commissions record. So now we're going to go down to our payroll register and fill out our information for 2 separate employees. In the textbook, letter A tells us our first employee is going to be Allison, which is employee number 2. It goes by last name, sorry, so it's Cavero Allison. And they tell us that Allison is married. She's claiming 2 allowances, probably has 2 children. She's a salaried employee, so we're not worrying about hours. So her regular pay was $1,200. Her commission, which we just figured out up top, is $312 for total earnings of $1,512. All right, so far so good. She works in the hardware department, so we're going to put total earnings, again, under hardware, $1,512. So now this is the number we're going to use to look up our federal income tax on page 66. So you're going to turn to page 66. You're going to use the biweekly Mary chart, and you're looking up 1,512 where it intersects two allowances. So they only give us a partial of the chart. So looking at the bottom chart on 66, 1,500 and 1,520, so 1,512 falls in between the two. So you're going to go over where it intersects two withholding allowances, and we're going to see we have $117 that Allison will pay in federal income tax. All right? So we're going to use, again, everything is coming off of this 1512 right now. So our state income tax in the directions, they told us, is going to be 5% of your total earnings. So you put in 1512 multiplied by 0.05 to get $75.60 for state income tax. Social Security is going to go off the 1512. She has not made over $117,000, so she does have to pay Social Security, multiplied by 0.062, which will give us $93.74. At this point, we're going to round to the nearest penny. Your rounding will make a difference if you do it at the end, or if you do it at this point. It could fluctuate by a couple cents here and there, but we're going to round at this point. Medicare, 1512 multiplied by 0.0145 gives us $21.92 for Medicare. So Medicare, you have to continue to pay in no matter what. Doesn't matter how much you make. So we got our health insurance and our life insurance. So it tells us in the book, going back to page 68, that for her health insurance premium is $56. So that's how much she pays, and her employer probably will pick up the difference. And her life insurance was $25.6. Just a review of life insurance. So if Allison dies, her beneficiary, so whoever she picks to get that money, will get her policy. There's two types, term and whole life insurance. So term means if she dies, she has it till she's 65. If she doesn't die before she turns 65, she loses all that money she put in. If she does die before then her beneficiaries get the money. Where whole life insurance, it doesn't matter when you die, you'll get it, but your premiums, the amount you pay, is much higher. Okay, so now we're trying to get our total deductions. So we're going to add up 117, 75.60, 93.74, 21.92, 56, and 25.60. So we're adding those all up, which is going to give us $389.86. We then subtract our total deductions from our total earnings, the 1512 again. So this from this to get our net pay, which is going to give us $1,122.14. So Allison is taking home $1,122.14. All right, they want us to do one more employee. So on line 4, James Lee is employee number 4. He's a hardware department sales clerk. He's single, one allowance, regular salary of $10 per hour with overtime paid 1.5 times at a regular rate. He worked 80 hours regular time, 8 hours overtime. All right, let's fill in what we know so far. So he's employee number 4. His name is Jason Lee, or James, excuse me. He is single. He's claiming most likely just himself, and he is a total hours is in effect here now because he's an hourly employee. So he worked 88 hours. Because it's bi-weekly, anything over 80 is going to be considered overtime. So we got to go 80 times 10 to find his regular earnings, which will give us 800. So now we take 10 times 1.5 which will give you $15 an hour, and 15 times 8 gives you 120 for overtime. And that's required by law. Remember, not all jobs get it, seasonal, whatnot. It all depends what type of work you're in. So then we add our two together. So our total earnings was $920. Moving right along, he does work in the hardware department. So we're putting the $920 in the hardware. And we're finding all of our deductions based off this $920. So we're going back to page 66, looking up $920. So because he made exactly $920, we have to move down to between $920 and $940, and where it intersects one exemption, which will give us $93 for federal income tax. We then take $920 multiplied by 0.05, because it's 5% for state income tax, which is going to give us $46. Social Security is going to be $920 times 0.062, which will give us $57.04 for Social Security. Medicare, you take $920 multiplied by 0.0145, which will give us $13.34 in Medicare wages. He doesn't have any life insurance. He only pays in for health insurance. And he paid in $28 for health insurance. Okay, so again, we'll add up all our deductions, federal, state, Social Security, Medicare, and our other to get our total deductions. So James's total deductions was $237.38. We take our total deductions from our total earnings to get our net pay, which will give us $682.62. All right. The beauty is they did our totals for us. There was probably more employees up above because these two do not equal 14,000. All right, so that's your payroll register for the pay period ended July 3rd. Okay, the last thing they want us to do here is to complete the earnings record for the quarter ended September 30th for James Lee. So we're going to do, quarter is every 3 months. So our payroll period ended July 3rd. And we're just getting our information from our payroll register and really putting it into the employee earnings record. So your payroll register has all of your employees. Your earnings record is just for one individual. So his total earnings were $920. His federal income tax, let me scroll it over, sorry, it's a little bit, was $93. State income tax was $46. Social Security was $57.04. Medicare, $13.34. Health insurance was $28, I believe. Let's look. Health insurance, $28. Total deductions was $237.38. For a net pay of $682.62. So that part is just recording the information from the payroll register. The one thing that differs in the employee earnings record is the accumulated earnings. So they told us in the textbook that as of June 30th, James's accumulated earnings, when you accumulate, you get more, gets bigger, was $11,900. So this pay period, his total earnings you go off of. It's not your net pay. People get really confused and try to use your net pay. It's not. It's your total earnings of $920. So we're going to add 920 to 11,900, which will give us 12,820. So for example, when you say you make $50,000 a year, that is your gross pay before any taxes are taken out. So same with your accumulated earnings. You know, you're going to say, oh, I'm at $12,820, even though that's not what you've taken home. All right, that is 3, 1 work together. You're going to do 3, 1 on your own, and I'm going to grade. Let's check our answer. Oh, got one thing wrong. We got a 19 out of 20. What did I do? Good there. 1,122.14. Let's see, why is that? Oh, I put the total deductions in 389.86, and I put 96. That's why I need you guys here to help me out. All right, so we're good here with 3, 1 work together. All right, guys, we'll talk to you later. Let me know if you have any questions.